As that election fast approaches, let's turn our focus to the impact on residential property if Labor were to win a majority. The ALP proposing to limit negative gearing to new rental dwellings and to halve the capital gains tax discount from the current 50% to 25%, with the intention to level the playing field for first home buyers competing with investors. But given the changing landscape in the market with house prices falling, could these proposals have a negative impact? Well, my next guest says that these proposals won't have any sort of disastrous impact on the market as some think. Jarrod, McCabe, Director at Wakelin Property Advisory, joins us live from our Melbourne studio. Jarrod, thanks so much for joining us today. Just with respect to, I guess, the changes here to negative gearing and capital gains taxes, what do you think? What do you think will be the implications for property investors, the residential property more broadly, before and after the changes?
Hi Leanne, thanks for having me. Look, it'll be very interesting. There's certainly been a lot of doom and gloom talk around how it will impact on property investors in the marketplace Australia-wide. I think, look, there'll be some short-term impacts and there'll be some changes. Certainly, given the fact that the proposal is to grandfather the current laws, I think that there could very well be a spike in property values, particularly in the space of where investors are quite active in the short term. But once it becomes the new norm, I think things will start to plateau off and the market will just move into what is currently the case. And property investment will still be a very worthwhile way of building wealth for investors into the future.
All right, I'll let you pop your earpiece back in there. That's okay. I hope you've still got me. I saw it popping out there, but I think you've still got me, so that's good. Look, you mentioned there those grandfathering provisions. What exactly do they mean?
So the current situation around negative gearing is that no matter what the investment grade property, you can claim negative gearing benefits. Now, what the proposals intend to do in regards to the grandfathering is that anyone looking to invest in established property will no longer be able to claim the negative gearing benefits, but those that are looking to purchase or investment properties within the off the plan or brand new type developments will still be able to claim negative gearing benefits. So there may well be a bit of a spike in that off the plan type development, and certainly developers will be very happy to see these laws coming in. But there may well be a bit of an uptake in established property leading up to that grandfathering date as people look to try and take advantage of the current laws.
And Jarrod, it's true that these proposed changes will only affect existing property, is that right? New property will be exempt?
At this stage, yes, that's the intention.
Okay. What about the implications for property investors? It's obviously really important for property investors to understand a lot of these changes. What do you think are the implications for existing property investors?
Well, it's quite limited, to be honest, for existing property investors because of the grandfathering laws. So they'll still be entitled to all the benefits that they have at the moment. There may be a limited number of new investors entering that space in the immediate future because they may well focus on different assets, given that the modern type properties can garner interest from negative gearing. But I think those that still own existing properties, it's not going to be a dire change where people are going to be dumping properties onto the market to get out of investments, because they still will gain the same benefits that they experience at the moment.
So what about prospective investors then? Do you think the Labor policy might discourage new investors?
I think in the short term, there'll certainly be that will be the case as the market gets used to the new changes and understands how they'll work. Look, there'll more than likely be some form of rental increase, particularly in areas where rental properties are fairly scarce and vacancy rates are quite low. So I think that there'll be a bit of a jump as investors look to try and claw back some of the losses that they'll make. But I think medium to long term, it'll still be a very viable option for those looking to create wealth.
So you're sort of saying some of the loss there of the tax benefits might be offset then by higher rents?
I think to a degree. I don't see there being a significant jump in rental, but I think in certain areas where rental properties are, there is a shortfall in that space, that there will be a bit of a spike. But it's got to, the rental market has to be prepared to accept it. And if the tenants aren't prepared to accept an increase in rents because perhaps they've got a great deal of choice, then they'll just move to look at other areas and other accommodation that they're comfortable with.
And look, just finally, I mean, we mentioned obviously this weekend's by-election, the Wentworth by-election. So these proposals that we talk about, obviously only if in fact Labor were to get in. How crucial is the Wentworth by-election this Saturday? Is there a chance that the government could actually lose their parliamentary majority?
Well, from listening to your broadcast just earlier, Leanne, I think that there's a very real chance. Now, whether or not the independent candidate is going to vote against the government remains to be seen. But look, there's a chance that could happen, and it could bring about the federal election coming earlier, and then that makes these changes a real possibility fairly soon.
All right, fantastic. Jarrod, McCabe, we'll leave it there. We really appreciate you joining us though today. Thank you so much.
Thanks for having me, Leanne.